Your crypto profits are in danger. Welcome everyone to our video on crypto taxes in the UK. Let's unravel the complexities and strategies to ensure that you are on top of your crypto tax game. The UK taxes cryptocurrencies as income and capital gain tax, and in some cases up to 40% of tax rate. Are you up for that? Let's find out everything you need to know about crypto taxes in the UK, including how to report your taxes. So let's first differentiate which income is to be taxed as income tax and which income follows the capital gains tax. Taxable events. Crypto to fiat trades like British pounds fall under the capital gains tax. Any crypto to crypto trade as well. Gifting cryptocurrencies to someone outside your family or your spouse, which will be taxed under the capital gains tax. Purchasing a service or good with crypto is also capital gains tax. If you earn crypto interest from investment products, that falls under the income tax. Earning staking rewards and receiving mining rewards falls under the income tax as well. Earning crypto tokens in DeFi is income tax. And getting your salary paid in crypto is income tax as well. And last but not least, receiving crypto in airdrops falls under your income tax as well. The capital gains tax in the UK is either 10 or 20% depending on the total amount of your capital gains, while your income tax rate depends on the total amount of your income and the tax bracket you are in. So let's look more into detail about your income taxes on your cryptocurrencies. Are you investing or trading cryptocurrencies? If the HMRC thinks that your trading activity fits into the investment activity, then your trading gains fall under the capital gains tax. Whereas if you're buying and selling crypto as trading activity, this activity falls under your income tax, and you might also have to pay national insurance. As default scenario, in most cases the HMRC classifies your crypto activity as investment activity, which means that those activities fall under the capital gains tax, while only special circumstances result in an income tax scenario. And please do not forget that the UK treats both crypto to fiat and crypto to crypto as taxable events, which means that if you swap Bitcoin to Ethereum, you have to determine your profit on your Bitcoin transaction. And if you swap those Ethereum to a fiat currency like British pound as well, please note that this is also a taxable event and you might calculate the taxable gain. But how much capital gain tax can you expect to pay? Let's introduce one player in the game, the tax-free allowance. If you do not exceed the amount of £12,300 of trading gains, your crypto gains are tax-free. But if you exceed this free allowance, every pound will be taxed at either 10% or 20%. To determine whether it's 10 or 20%, it depends on your total capital gains within this tax year. You have to pay a 10% tax if your capital gains are up to £50,000 within this tax year. You have to pay a 20% capital gains tax if you earned up to £150,000 within this tax year. And it is important to note that the tax-free allowance was cut to £6,000 lately, which increases the probability that you might have to pay taxes on your crypto gains. And now let's look at other transaction types where you have to pay capital gains tax on. If you give someone other than your spouse any cryptocurrency, you have determined the profit you made on this transaction because those gifts are considered as a disposal. You have to pay a capital gains tax on the difference between the current market value and the market value of your coins at the time of acquisition. If you use your cryptocurrencies to buy something, this is considered a disposal as well, and you have to determine your profit from this transaction as a capital gain as well. This capital gain is also the difference between the current market value and the market value at the time of acquisition. Now let's look at income taxes for crypto. The following transaction types are taxed at your income tax rate. For example, receiving new coins in an airdrop, receiving your salary in crypto, receiving interest in form of crypto including stablecoins from interest earning products, receiving staking rewards, receiving new crypto from mining activities, and last but not least, DeFi earning activities like staking. These activities are considered non-trading activities and are therefore taxed under your personal income tax rate. Let's look at an example. You received 1000 coins of token X. Each token X at that time is worth £2 per coin. You'd need to recognize the fair market value in pound of those coins. In this case, it would be £2,000. If you make £50,000 a year, plus the £2,000 crypto income, you'd be taxed at a rate of 40%. And in case of salaries, you would also have to account for national health insurance contributions beside your income taxes. But now let's look at some good news. There are several ways to reduce your income tax bill in the UK. First, you can offset your losses against capital gains and also for future capital gains. If you have some positions of unrealized losses, it can be helpful to realize those losses, and therefore you are able to offset those losses against the trading gains of other profitable trades, which in sum reduces your capital gains tax. If you don't have any capital gains within this tax year, you are able to carry forward these losses into the next tax years, so you are able to reduce your capital gains tax in the future. However, if you want to reduce your capital gains with those losses, it is important to track and record all of those losses accurately during the calendar year. For some transactions you don't have to pay any taxes at all in the UK, and those transactions include buying cryptocurrencies with fiat like the British pound, simply holding your crypto assets without selling any of them, sending crypto between personal wallets, gifting cryptocurrencies to your spouse, donate any digital assets to charities. And if your profits do not exceed the tax-free allowance, then you don't have to pay any taxes on your crypto gains. In the UK you have to keep track of all your crypto activity, because you need to record and file all of these crypto activities, gains and losses to the HMRC. Those information include acquisition prices, sales prices, transaction dates and much more. But if your records are correct, the HMRC will accept your losses and reduce your capital gains tax. In short, you can do your crypto taxes in the UK with the 3 following steps. First, you import your trades from your favorite crypto exchange with crypto tax software like CoinTracking. You calculate your capital gains according to HMRC approved accounting methods. And last but not least, you generate an HMRC ready tax return with easy to use crypto tax software. Your crypto profits are to be stated in the UK tax form as self-assessment in the capital gains tax summary. The form is SA 108. Please note that the filing deadline for your tax return in the UK is the 31st of January of the following calendar year. Now you have everything you need to know about your crypto taxes in the UK, and let's just recap the most important information for your tax filings. First, crypto to fiat trades like British pounds are taxable events in the UK. Crypto to crypto trades as well. Any crypto sale made as an investment from an individual is subject to the capital gains tax rate. Any crypto sale made as trading activity is subject to income taxes. Spending crypto to purchase products or services is considered a disposal and taxed under the capital gains. Crypto earning activities like airdrops, salaries and others are taxed at an income tax level. Buying crypto and just holding crypto is not taxable, and sending crypto between personal wallets and gifting crypto to your spouse are no taxable events. You can offset your tax bill by deducting crypto losses from your gains. And you have to file your crypto taxes in the UK until January 31st. We hope that you enjoyed this video. If so, please hit that like button, share the video and ask any questions in the comment section. Happy tax season!